Well, for a closer look at markets, what's likely to dominate this week? Peter McGuire joining us from XM. Pete, a very good Monday morning to you. And gee whiz, you take a look at those equity markets going from strength to strength. Certainly, it'd be hard to fight the momentum at the moment, wouldn't it?
Absolutely, Andrew. Good morning. Happy Monday. I mean, you look at the Dow. I can't believe it, approaching 43,300, 58.64 for S&P, nudging on 6,000. And you've got NASDAQ at 18.5. So, yeah, very, very strong. Russell, I'm keeping a close eye on, getting ever closer to 2,300. Look, it's the fear of missing out. It's been an enormous rally, and one can't argue with it. And the velocity of it has been incredible. Let's see where this quarter takes us, but it's certainly going to be a very interesting one.
It is indeed. Pete, let's just take a look at the wrap-up then for daily performance, and gold clearly the standout.
Yeah, Andrew, I mean, we did a special report. It's really quite incredible what we've seen as far as growth over the last year. $1,800 for an ounce. Now you're nudging 27.40, 27.50. Is 3,000 the new handle come November? Everyone's got their eye out on it, and they're saying that it's very capable of hitting those sort of numbers. It was laughed at probably if you go back to, maybe 9 months ago at the turn of the year. Anyone saying that or spruiking that would have been laughed. But I'll tell you what, it's come home to roost, and it's coming home like a freight train at the moment.
Yeah.
You can't argue with it. It's just mind-blowing, Andrew.
Yeah, I'm just seeing some forecast there that it's likely to hit $3,000 an ounce by the fourth quarter. So Clearly the gold bug's loving that. Pete, yes. Elsewhere, so let's take a look at where we're at just as far as central bank movements are concerned. Of course, expectations the Fed is going to cut again, but more likely 25 than 50.
Absolutely, Andrew. That seems to be. I mean, everyone's got an opinion. There's some are saying still at 50, some are saying a greater majority 25, and there's a large band of analysts even saying for no rate cut on the 7th of November. So we've just got to see where that falls. But US dollar's taken a run up. It's at 103.50 sort of number for that US dollar index. So that's relatively strong. Actually quite strong considering where you've seen the euro. And if that's a 25 basis point cut, then it might take a little bit of heat out of the US dollar, but maybe it's baked in already.
Well, of course, we have seen sizable cuts from the Fed, the Bank of New Zealand, also Bank of Canada, likely.
Absolutely. I've got a 75% probability of a rate cut this week on Wednesday. That's when they'll be announcing. And it's very, very strong. As far as they've had very weak growth, they've got inflation certainly under control. CPI is sitting at a 1.6% for September, Andrew. It's a 3.5-year low. The Canadian dollar's depreciated the best part of 2.6, 2.7% against the US dollar from its peak in September. So everyone's really discounting the rate and expecting that 50 basis points come Wednesday.
Meanwhile, Pete, what are we seeing in the Eurozone at the moment in the prospects of their cuts ahead?
Well, you've had the ECB, Andrew. They've had 3 rate cuts, been successive, totaling 75 basis points. We understand the PMIs and how the structural weakness and political weakness in France and the structural weakness of the manufacturing because of weak global demand for Germany, the powerhouse of the and flash PMIs come out this week. So we've got to be very mindful. You've got weak demand for finished products coming from Germany, out of China. And I think the overall momentum is going to be softer euro. Many are talking, Andrew, that you could even see parity against the US dollar. I think that's very, aggressive, but who knows? I mean, these markets are capable of anything. We were at 111 the other day. We're now at 108, and it seems to be cratering that euro dollar.
Across the channel, what are you seeing with the UK? I notice retail sales improving there. Overall, how's the economy travelling?
Relatively, I mean, it's okay, but it's really quite weak when you're looking at it compared to, years back. But the overall thoughts as far as, and there's the chart, that tells you how manufacturing services composite are. It's, you're nudging above 50, but it's certainly not moving in the right direction. And let's see where it runs when we've got numbers being released over the next 60 days. It could get even ever closer to that 50, Andrew, which is, a line in the sand. Anything above it is generally expansion, below is contraction. So we've just got to see where we run.
And Pete, close to home, China. Of course, we have that raft of stimulus measures, which the markets have got very excited by. Today, a possibility there we could see both the 1 and 5 year loan prime rates lowered.
Yeah, we'll have to. I mean, Andrew, when you're looking at as far as a debt to GDP model, you've got a jaw dropping 366% in Q1 2024 as far as debt to GDP. That is just frightening. That's double the ratio since the GFC in 2008. So they've got their hands very much tied. We need to see a lot of stimulus coming out of it. And I just made some notes. For every 1 unit of GDP for China, the economy produces 3.66 units of debt burden. So that really creates the next sense of it. Are they going to be able to deal themselves out? I know that the IMF are meeting in the next couple of days in Washington, and the global thought is debt. So that doesn't stand well for China. We'll just have to see where they roll, but their equity market has been outstanding, and everyone's got their eye laser focused on, the non-financial corporates. They've got a highest debt level, Andrew, a highest ratio at 171%.